Good morning. All right. So yesterday pretty much went as anticipated. Not too much happening there, but the transports took a little bit of a shellacking yesterday. I mean, it's still trending up here, but you can see obviously it's flattened out. Good morning, good morning. And that was the big negative day. And well, I have seen the transports go in opposite directions of other markets in the past, but the Qs and the tech ETF had nice turnarounds and they look pretty good. And today's kind of like kind of a little apprehensive about the follow through. We're not getting this gap up and continuation. So I'm not so sure, but thinking it's going to be more sloppy type of price action. But there are things that look pretty decent that could move up on their own page. But these transports, breaking under these lows like this, where they were going sideways at all-time highs, they were supposed to break out to the upside, but you can see the clues here. The green bar ignored, back down, and the bottoming tail bar, which, okay, that can make sense, and then follow through higher. But then on the retest of that 180 reversal, we get a topping tail, and now the breakdown on the base. So short-term bearish price action here, which suggests lower. And, the question for me here, I'm thinking is, well, if the Qs are going to follow through, can they go on their own page? Do the transports get turned around? But on the other hand, oil certainly looks like it's going to keep going higher, and that's not good for the transports. And I've said, maybe, I don't know if it was last week or the week before, but I have said it was kind of interesting that the airlines could move up as strongly as they have been in the face of oil that continually looked like it was going to go higher. Well, maybe at this point, it's become obvious enough to many that oil is going to head higher, and well, the transports are going to underperform now. So anyway, this market has been one in which, money shifts around rather quickly from sector to sector. So not so much of a concern, but in any event, so transports suffer, and, energy continues to improve here. So those stocks, as I mentioned yesterday, have already made a pretty decent run. So I don't think it makes sense to be entering them at this point. Rather, wait for little consolidations or pullbacks. But we're keeping an eye on that. And well, bonds are down again here. And that was another interesting divergence as it lasted, where bonds were moving down. Of course, interest rates go up, and financials were acting like they were oblivious to it until all of a sudden they took off. And so, yesterday they pulled back further, and rather than going sideways up here, which would have obviously been much more bullish. So now we need to see if they can get themselves turned around here. And they should. They've got the underpinning of higher interest rates and a wider yield curve now to support that. So now what we need to see is that buyer step up, and you can see that is happening pre-market here. It's early. We'll see how much follow through there is here. But overall, the market is correcting here in different sectors. We see the transports now, and on the other hand, we see, the Qs, which have been correcting, had a good day yesterday as they gapped down into support and buyers stepped up again. Now, the question, anytime we see this kind of price action is, well, does the bullish trend continue? Which it is. You can see the rising moving averages and how they're moving up at approximately the same angle, or hey, they do that until prices roll over. And of course, moving averages have to follow price and they lag. Useful tool, but they do lag. And so mean, if you put a 5 MA on here, maybe it's rolling over. I don't know. But I'm just looking at prices here and how they're moving up. So it becomes questionable. Is this upside breakout going to follow through to the downside, or is this going to flatten out and move up? And that's just part of where we are right now in the market, where there's this uncertainty about the existing trend and whether, this corrective action leads to more downside, or it's just bad corrective action and then the trend continues. And we do give the benefit of the doubt to the trend that during this point in time in the markets, it becomes more difficult because it's choppy rather than trending. So you recognize that, and you lighten up on the activity, and that's the way it goes. Got a bottoming tail bar in the Russell, and that's been correcting as well. So these sideways consolidation here is a representation of market participants saying, I'm not so sure right now. And you can see the 20 MA is starting to, well, it's at the top of prices here, but it's intersecting the candles. So that's a visual aid as to indecision right now. So red bar looked like it was going to go lower. It doesn't. Little bottom topping tail bars, gap up that doesn't go anywhere, bottoming tail on a move down. So plenty of indecision going on here. Don't let it get to you too much. It is what it is. It can be frustrating when the markets are chopping around that way, but there's nothing we can do about it but to let it evolve and wait for a signal of direction that's decisive in one way or the other. Spiders look great, so again, mixed messages as to what we're looking at. And that, being said about, okay, they look great, but they did break out and prices are under the low of the breakout bar. So that is a short-term negative, but still above this support level. So can it hold here? And so the message basically is the same, of that this is a market that's showing relative strength, but is also correcting and showing a bit of uncertainty here. So don't press the accelerator. And that's what the message is until things tighten up and we do get clearer patterns here that tell us. So one of the terms that I use about signals as to the direction of the market is an event. And right now we don't have any clear event other than the event being a message of uncertainty. So what does that mean to have an event? Well, something like that, something like that, something like that, versus, okay, we're just chopping down and moving under a breakout bar's low and it's into an area of support, and can it hold, or is it going to go lower, and so on. The same as the Russell and the transports and the Qs. While they're different pictures, the message is essentially the same. And so there's the futures, which 24-hour chart looks a bit different, but hey, buyers are stepping up on dips, but they're backing away at resistance. Well, what is it going to do? Right now, you can see the futures are down a little bit. No big deal. They're inside of yesterday's candle body at the moment. Really nothing to do. The Dow, which was showing relative strength and moved up to new all-time highs, that was anticipated from early in August, as I wrote in the letters, and it played out as the pattern suggested that it should. It wasn't that I had a crystal ball that tells me the future. It's just I followed the patterns, and historically it said it was going to make new all-time highs. It happened. Our internals are not at an extreme yet. So in other words, there is the possibility and probability that we'll see more action to the upside. And all of this stuff going on in Washington, and this infighting is certainly having an effect. And every day when you look at the news, it's, well, trade wars or tariffs are subsiding. Oh, there's concerns, and it's the same thing every other day. Meanwhile, the market goes up, and just depends on how low or how much of a pullback there needs to be for buyers to step up again, because all of this is kind of baked into the cake, and the trend will go up. I'm assuming until it accelerates and the internals become extreme, and then historically we know there's a problem. You got oil. Looks like it's going to push up to that 75 level, which continues to support those energy stocks. And you can see the pattern that kind of played out here of that downside shakeout, or whether you want to call it a head and shoulders bottom. And now it's cleared this area here, and it's got, a clear shot up into that area. And it is an area, that little sideways consolidation there. So we'll see. Right now, wide range bar moving up here. So far, a little consolidation day, and it looks good, like it should be able to go up. No other way to interpret that. And gold still just kind of flat. And I think the longer this goes sideways here, the more it suggests that there isn't any real enthusiasm here for taking this higher, because that bottoming tail bar that had formed back there a couple of weeks ago, I think it would have resulted in a little bit more of a move to the upside, and at least clearing this high versus coming right back down again. So we haven't had any interest in gold, and we still don't at this point. And what else we have here? Biotech stocks were doing decently yesterday, but overall, same message, sideways. I don't know what IBB, maybe it looks a little different. Sometimes it does. So it does look a little bit better, but it kind of got a continuation pattern there where it could go up to the highs and kind of went up there a little bit and backed off pre-market. The message just continues the same everywhere, with different variations of mild corrective action and uncertainty. And it's just not a time to press the accelerator, not yet. Retailing getting a little bit weaker, been consolidating. Yesterday, it had a move under this recent consolidation, but closed there above the rising 50. We'll see if that actually follows through to the downside. Consumer staples have been taking a bit of a hit here. And if you look at multiple time frames, it's understandable why, because, they had a hell of a run over a few years, and then this nasty break. So it's right up into a resistance area where it should make a sell setup and turn lower. But we'll see if it can survive and base out here. Another message, stand aside unless you're an intraday trader. There's probably opportunities there for scalps, but this isn't one in pattern here that says, hey, here's trend trading opportunities. So don't do it. And what else here? Home builders got a crack there. And these interest rates moving up as they are, finally having the negative effect in certain places and the positive effect in other places, as it's supposed to. It just took a while for it to play out. And the internet ETF is holding this cliffhanger over here. So we've got that reversal, which certainly helped the reversal in the Qs yesterday, and it helped the reversal that happened in technology, right? And we go there. And so what's going to happen today? I think it's going to be more of the same, but maybe we'll get a surprise as to, how this might unfold, or get an event of giving us a decisive direction one way or another. But the messaging here and takeaway is, it would be foolish for us to think that there is great potential possibilities here to create money while the market is correcting in this sideways chop. So that basically saves us what I believe to be a correct bias. So with that being said, I'll turn it over to Dan. Glad you enjoyed it. Got to have that plan, and we have our adjustment strategies, because on any given day, what I'm seeing in the moment could be totally thrown out the window. But, we've got tools that say, hey, this is changing, so change with it.
Did I just hear Greg say it's a beach day?
Not necessarily. And then besides, it's getting a little cloudy, but and anyway, Dan, my boat's still in the shop, so I may as well sit here and work.
I said beach day. I didn't say boating day.
Well, I get on the boat, go out to the sandbar, and kind of like the beach.
Yeah. Hey, folks, a funny story one day. Greg was, I don't know if they were working on your house or whatever, and you said, yeah, the roof, and you said, it's too loud here. I'm getting out of here. So he took his boat out to the island, and he was running the chat room from his boat with the generator on, working on seminars, his floating office.
And actually, if you were to listen to the introductory course, you kind of hear the background sound there while I was in the cabin while some noise was going on. But it was really cool, to be out there. It was quiet, nobody's there, and
nice. All right, let's look at opens here. Medtronic, that was one on its own page. We're long stock, and I'm also short puts. CRM up here pre-market a little bit, and it's coming in for us. And I sent a text alert out to our subscribers saying, aggressive traders can start nibbling into the close. So they were rewarded a little bit, but markets are, giving up their pre-market gap. So I'm 100% neutral here also. Same bias as Greg succinctly described, only looking for tier one setups. So the game plan is identical. A couple other opens here. Sienna covered call, it's fine. ACXM, we're still in trail mode on that. We're long stock. Cisco, long stock. TMUS, long stock. Casey has not triggered yet. Vico, we shorted yesterday. Visa has not triggered. Charlie Papa has not triggered, but it's still fine as a go. Moss, we have a put spread. MLM, we have a bear call spread with a tightened stop. And I think that's all. Just holler at me if I missed one. Let's take a look at my miscellaneous list here. Facebook getting whacked here pre-market. Two top co-founders of some app or whatever are leaving. Spiders, we have a put spread for this Friday. So actually this retracement is fine here on the 15-minute chart. All right, so that's fine. But remember I said yesterday when we looked at the markets multiple times, we were talking about support, resistance, trends, this and that, and I said there's absolutely no pattern. And so I have the same opinion right now, but I do like this 15-minute chart for setting up for a day trade, and then we'll decide what to do with it afterwards. Today's Tuesday, so if we get a good setup, we could sell some out of the money puts that expire tomorrow. A lot of news this week. We got, Kavanaugh Thursday, Rosenstein meeting Thursday. We got the United Nations meeting going on. We got FOMC tomorrow. Still SQ. Yeah, we are in SQ. How did I miss that? I think, No. Actually, yesterday we met our target, John. That's why it's out of my portfolio. Yeah, so you'll see it closed out yesterday. But I actually, yeah, I saw that gap in today. Yeah, we closed it out yesterday. All right, cool. Yeah, when it made the dip, and that's why I love bidding to try to get close to our maximum gains. We got filled on this blip down yesterday. Now look, now it's a bullish, it's gapping up $2.70. And we're feeling zero pain. I mean, I love our management strategies on options. CGC, hey, where's Pat? I told you yesterday, Pat, we're gonna look to sell a put spread on this ugly looking thing. But it's kind of a reverse head and shoulders, isn't it? If you get creative of what the messages are, here's your head, here's your left shoulder, right shoulder, engulfing bar, rising 20. Look at that beautiful 15-minute chart. That's going in a window of mine. A thumbnail, I mean. That's beautiful. Bitcoin is just holding this level. I don't know what it's going to do, and I wish they were optionable so I could sell options around them. USB, we're in a put spread. It's